Hey everyone, Couch Investor back to another video for today. So we had big tech companies reporting earnings. In this video, I will cover Alphabet. Maybe I'll do another video about Microsoft. Both companies reported good numbers. Otherwise, the stock wouldn't have been up between 3 to 5% after hours. Now, with Alphabet, of course, the bar has been set pretty low by the market, right? The consensus out there is that Alphabet is dying, Microsoft is taking over, their monopoly on search is dying, they are behind on AI, etc. Of course, some of it might be true, but as you will see during this report, there are some positive things. For example, a $70 billion buyback program. Now, usually that happens when the company thinks its shares are cheap. We're going to talk about all of that in this video. First of all, thank you very much. We've reached 25,000 subscribers on this channel. Really appreciate all the support you guys have been giving me, especially this year. And thank you to the newest member of this channel, Ramanathan. Thank you for deciding to support me even further. Now, with regards to Alphabet, before I jump into the earnings report, I just want to show you this graph right here, this picture right here by Mokoya on Twitter. So Google to Bing global download ratio. As of April 17, Google was downloaded 3.8 times more than Bing. Of course, as you can see, previously it was downloaded at 20 to 40 times more, but still right now 3 to 8 times more than Bing. Even though Bing is definitely gaining here some market share, Google still the dominant player there, but let's keep an eye on what happens later on. Now, before we jump into the earnings report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. We're trying to reach 30,000 this year, and if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So first things first, quick note here from the CEO of Alphabet and Google. We are pleased with our business performance in the first quarter, with search performing well and momentum in cloud. Very important segment. We're going to talk about that later. We introduced important product updates anchored in deep computer science and AI. Our North Star is providing the most helpful answers for our users, and we see huge opportunities ahead, continuing our long track record of innovation. CFO now said, resilience in search and momentum in cloud resulted in Q1 consolidated revenues of $69.8 billion. That's up 3% year over year and also beat consensus, or up 6% in constant currency. We remain committed to delivering long-term growth and creating capacity to invest in our most compelling growth areas by re-engineering our cost base. Now in Q1, as you can see here, $2.6 billion in charges related to reduction in our workforce and office space. Now with regards to workforce, they did still increase by 500 quarter over quarter. I don't know how this is possible, but we're going to talk about that a bit later on. Now, as you can see here, revenue is up 3% year over year, or 6% as we've seen before. Operating income was $17.41 billion with an operating margin of 25%, which is down from 30% in the same quarter last year. Now, other income, in this case, it's not an expense. Net is $790 million, that is. Net income was just over $15 billion, and then diluted earnings per share, $1.17, which also beat consensus by around 10 cents or so. And now let's see how well every segment is doing here. Now, of course, quarter over quarter, we're not going to look at it because quarter over quarter, Q4 is usually a much better quarter overall. Q4, if I remember correctly, total revenues was closer to $76 billion or something like that. So really don't try and make the comparison to say, oh, quarter over quarter, company has deteriorated significantly. It's not really a good comparison. Anyways, Google Search and others, that's up year over year. Now it's at $40.35 billion. YouTube ads is actually down, not surprised there, $6.69 billion. Google Network at $7.49 billion. So overall Google advertising is basically flat, I'll call it year over year, at $54.54 billion. Then you can add Google Others to Google Services total, which again is up year over year, but I'll call it flat-ish, $61.96 billion. Google Cloud keeps growing, and that's good to see. Now, this is revenue, this isn't profit, but even with profit, we have good news there. So with revenue, Google Cloud this quarter, $45 billion. Other bets sits at 288, which is down year over year. So we're going to skip this. All in all, $69.78 billion. Now, total traffic acquisition cost. We've talked about this topic in another video. If you want to watch that, it's going to be in the top right corner. This is down year over year, but again, down flat-ish, 11.72 billion. And then number of employees, 190,711. Last quarter was 190,200 and what was it, 70 something. So yeah, they actually managed to increase quarter over quarter despite laying off a lot of employees. But I say here, as of March 31st, 2023, the number of employees includes almost all of the employees affected by the reduction of our workforce. We expect most of those affected will no longer be reflected in our headcount by the end of the second quarter of 2023, subject to local law and consultation requirements. Okay, now, of course, we also talked about DeepMind and, well, the two, let's say, departments of Google merging into one together. They talk about this a bit here again. Now, this segment will not be in the other bet segment. It's now in the corporate cost unallocated one, as they say right here. This change does not affect first quarter reporting. The group called Google DeepMind will be reported within Alphabet's unallocated corporate cost beginning in the second quarter of 2023. Now, when you look at operating income, Google Service is again flat-ish, $21.73 billion. And now Google Cloud, first profitable quarter here, $191 million. I said this in the past. I said, Google Cloud, watch out. This is going to be a catalyst. This is going to be a tailwind for Google this year. The market will see, finally, cloud segment has turned a profit. Stock will react accordingly. Let's see what happens after the earnings call. Then other bets has increased in losses here, $1.22 billion. Corporate cost unallocated, $3.28 billion. Of course, big increase here year over year, and that's because Google DeepMind is now in this category. Overall, total income from operations, $17.41 billion. Now, if we continue here, in January 2023, we announced a reduction of our workforce, and as a result, in the first quarter of 2023, we recorded employee severance and related charges of $2 billion, representing the majority of expected costs associated with this action. In addition, we are taking actions to optimize our global office space, and as a result, we recorded charges related to the office space reduction of $564 million. You can see it all here in the table below. We may incur additional charges in the future as we further evaluate our real estate needs. So again, restructuring across the board will take some time. I don't think we're done just yet. And then, to me, big news, good news actually for shareholders, and that's stock repurchases. On April 19, 2023, the board of directors of Alphabet authorized the company to repurchase up to an additional $70 billion in its Class A or of its Class A and Class C shares in a manner deemed in the best interest of the company and its stockholders, taking into account the economic cost and prevailing market conditions, including the relative trading prices and volumes of the Class A and Class C shares. I fully expect them to buy some shares already in this Q2. Oh, and free cash flow for the quarter ending March 31st was $17.22 billion. So, of course, some of you might ask, oh, don't they have anything else to do with their cash? Well, when you're generating $17.22 billion each quarter, I think share repurchase at the current price makes sense. So to conclude, unless they say something crazy during the earnings call, to me, a quarter that basically tells the market, look, we're still Alphabet. We're still one of the biggest companies out there with one of the biggest moats as well. We still know how to operate. Yes, we've done some mistakes. We're trying to correct it right now. I'm saying they're not out of the woods just yet. One, let's say, okay, solid quarter does not mean that suddenly every investor, every shareholder out there will be like, oh, Google is back. Let's pour all our money into this stock. That's not what I'm saying. I think it will take some quarters to gain the confidence of the overall market. That's just in my opinion. Of course, this is a good start. Let's see if they can continue. If they say something crazy during the earnings call, expect to see this in the pinned comment down below. Of course, do share your thoughts down in the comments as well. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.